Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, March 26, 2026. It's 1:20 p.m. Eastern Times. I'm starting the video, and what I'm going to do in this one is both a trade idea update as well as an educational post slash trading tips. That's what I like to do on this site, not just share trade ideas, just kind of air my thoughts out and give you lessons I've learned both the hard way and the expensive way, and hopefully save you guys time and money by sharing mistakes that I've made or tricks that and tips that I've figured out over the years. So with this one, we're going to talk about ETFs. I've talked on this many times in the past. How I'm sure there's others that recognize what I'm talking about here, but that is the negative press that the leverage ETFs get across the board. All kinds of disclaimers. Some brokers, like Merrill Edge account, they won't even let you trade the inverse or a lot of the ETFs. They just figure that the retail public, and I get that it's out to protect their clients, but they can hurt you or really help you, and I'm going to talk about that real quick. So what I'm going to do here, I'm going to the FAQ page. When you go to resources, frequently asked questions, trade ETF related questions, and you go to this one right here. Is there a disadvantage to holding an ETF or ETP? ETP means exchange traded products. That includes ETFs and ETNs. A little bit different. That's also the differences there are explained if you're curious what the difference of the two. But in here, and I did this years ago, this was a post I made back in 2015, so over a decade ago, but it holds true today. And again, I like to update this time to time because, again, for all the reasons I've seen just about nothing but negative press. They're the scourge. They should be banned. And I think that has to do with, and I'm going to say something without trying to come across as cocky, but most people don't have the timing. And what I say on these, when I believe there's a potential for a swift unidirectional drop. For example, recently I called for a crash in silver right before it happened. Right now I have an elevated crash risk on the stock market. I think all risk on assets are going to go down. We recently reshorted Bitcoin and strategy, so I'm going to talk on that in this post. It holds, and remember, the same concept holds true to all the leveraged, both inverse, meaning negative or short, and non-inverse, or the long side, 2 or 3 time leverage ETFs. So that leverage, and you're gonna read about them. They say they should be day trading only vehicles, never held for an extended period of time. But again, and that's a big, huge if, but if you have the skill sets and the confidence to identify and position for, again, what I call a mostly unidirectional trend, the math is explained in here. It's basically the leverage doesn't only work against you. You don't have that decay. It actually works in your favor. And again, explained here, meaning if you go with a 2-time leverage ETF and you do it at the right time, instead of getting twice the performance of the rise or drop in the index that you're trying to track, whether you're going long or short, you can actually do much better than 2 times. Same thing holds true with the 3-time. And in many instances over the years, I've given you real world examples. And I always say that to people. There's a lot of stuff on the internet and a lot of so-called experts that can, just about anybody can write anything they want and publish it, and get on places like, what is that, Motley Fool and investing.com and all these other sites that let people write. That's their business model, and present themselves as so-called experts. So just when I see something, and again, a lot of these folks know what they're talking about, but I always, I'm super analytical, and I'll do my own due diligence, and many times it's a crock of shit. They might think they're right on something. You check the math. So the math is here. How and why it works is all in here. You can read about that. And again, yes, if you go in a trading range, whether you anticipate or not, it doesn't matter. But if you get locked in a trading range in a security with a leverage ETF, that's where this decay that I speak of and that you read about is the worst. The only other thing being, worse than getting in a up and down backward grind is being in the opposite direction. I mean, but that's a given. In other words, if you go short an inverse leverage ETF and the dang thing, the underlying goes against you. All right, let's move on. You can read about that, and I'm going to give you not just a real world example, but also show you how I kind of narrow down if I'm going to use those, because I do have, like most of you, not just taxable margin trading accounts, that you can short in. You can short MSTR. And I've also said this very often on the site. I'm going to typically use the one-time non-leverage, whether it's a sector ETF, for example, let's say IWM. We have a short on IWM. You can certainly use TWM. That's a UW. TWM is a 2-time short. TZA is a 3-time short, small cap. So you're welcome to use any of those, but I don't provide the charts usually on those, because of that decay. It distorts the true technical picture, the true support and resistance levels over time. So when you use a non-leverage like IWM to track the Russell 2000, it's going to be accurate. It doesn't have the decay, again, explained in that FAQ page. All right, so if you are still with me and wondering where I'm going on this, so on the 19th, been watching this. We've been swinging strategy. It's a what I call a direct crypto proxy or Bitcoin proxy trade. It's basically, as I explained many times and earlier today, they hold. It's a Bitcoin treasury company, and they use a leverage model to accumulate and hold Bitcoin, so it's going to go up and down directly with the price of Bitcoin. So this is the most recent trade idea. Last long we did here, I gave you a total of 3 targets, but then I changed my mind. Just like they say, it's what is it, the saying, it's a woman's prerogative to change her mind. My wife will tell you she changes her mind all the time, but a trader, you absolutely have to be flexible. So if I see or smell, get that little hint, little nagging thing in the back of my head, or again, I analyze the charts daily, I say they're static, so I closed out those 2 targets, said, look, let's just book it here. Upon further review of the charts, we're still trading on that T1 zone, so I'm removing T3 and T4. So we took a quick 47% profit off the bottom there where we went long, and that was after that monster short on the way down where we covered at that T3 zone. And so, and then just recently, time to run it again. This is what I do. Again, I have, like I've said, no absolute allegiance. I'm neither bull nor bear on any one thing permanently, and that's what I like to do. Go equally apt to go long as I am short any instrument, depending on what the charts say. All right, so without further ado here, there's giving you the trade. It was an entry here recently, 136.09 or whatever that is. And those are your targets. And again, like any trade, it's either going to play out or not. I give you a suggested stop. All the notes are there. This is part of my logic for those that think, oh, no, Randy, if the market crashes, gold's going to skyrocket, and so will Bitcoin, because they were, that's their whole thing, is that, it's a safe haven. And maybe that happens. And guess what? I don't have my whole account in a Bitcoin short right now. So my bets are always spread. And I'll also pivot and, change if something else changes. So, all right, without further ado, let's jump into the options. If you don't have 2 things, if you don't have a margin account, meaning you have a regular brokerage account, but it's a cash account, you can't short, or let's just say that you're going to do this in a retirement account, tax deferred account, where shorting is not allowed unless you have a margin IRA. Interactive Brokers offers those where you can short futures contracts, but it's an IRS or I believe an IRS or SEC regulation, no shorting of stocks, ETFs, or anything like that inside of IRAs. So it's not a broker specific thing. It's an industry-wide thing. But of course, you can buy inverse ETFs to get the same net effect. So that's what I'm going to do here for you. We looked at, so I did a Google search today. and to find out, how many are out there, which ones exist. I knew that some exist. And so you have a couple of here. This one, I believe that's, I looked at that. I think that's a overseas company. I don't know. Let me just type it in real quick. I got away from that one. Yeah, see, when I went in, it's welcome, retail professional. Location default is the EU. So I go to English here. I went in and then I don't see it. So I guess in the US, they may not offer it. Maybe it's in there. I don't spend too much time doing this. Again, I just want to get this video out to you guys in case some of you want to be short strategy. There's also inverse Bitcoin ETFs, but again, strategy is a leverage play. So I already have given you my thoughts that if I'm right on this, and we're going to have that kind of everything must go liquidation sell off. What I'm doing, I'm going through here and I just don't see it. So I don't think it's offered in the US. So then I zeroed in on all the 2 times that are. There's 1 SMST, 2 from, these are the companies, Defiance ETFs, the issuer, Rec Shares. There's their MSTs, their ticker on that one. And then Granite Shares has one, MSDD. So the first thing I do is I pull the charts on all of them. Let's just do that now. Let me, well, I have them written down. I'm going to go over here, go to a live chart. Where did my chart go? Boom, boom, boom. I'm on a 60-minute chart MSRT. When it hit a bottom, I gave you an initial. I did this back on February 6th. So we were right there, the day of the very day of the low, because that's when we went long. And I gave you an initial resistance target zone that by my calculations, that's where Bitcoin or strategy was going to go to. It's very good resistance. You can see the top of that zone, how well it was. And that's exactly where we went. And so then it's time to, we milk that, that 45% or so profit. Let me go to the daily chart and type in these other guys here. So I'm going to go in order, just in no particular order, SMST. So the first thing I do, if I'm going to trade an instrument, whether it's a stock, an ETF that I've never traded before, I just eyeball the candlesticks. And I'd have to pull an example, none come to mind, but see how these are normal looking candlesticks? You see a normal body, green and red. It just looks like any other chart, right? When you get again, I'm sorry I don't have an example queued up, but wonky looking candles with big gaps, very thin. It just doesn't look right. Then the first thing I do, that's usually a very thinly traded security. So I look at volume. You can see volume bars down here, but that's not telling me anything. So I go up here. I have all these little things. This second box, as I put my cursor, you're following me up to the top left of the chart, it says that's a 90-day average volume. Well, that's 463,000 shares. And it's a $57, almost $58 security. So that's one. So I put that down on my little notepad. I wrote it down. I'm going to go back to this. The next one's MSTZ. And again, I'm looking for healthy, hearty, full candles, number one. But then I look, okay, so that's only a $10 security. These are all, again, the 3 negative 2-time or inverse or short strategy ETFs. If you want a short strategy, you buy these. You go long, you buy them in an IRA, you can buy them in a regular account, and then I'll get to the kind of performance thing later. So this guy here, now the price is only is what was it, a fraction of the other one was about $60, almost a $60 security. So this one should have about 6 times the volume, right? Because if you're going to buy, $10,000 of this one or 10,000 of the other one, you're going to buy a lot more shares. And the total volume of that is 16.1 million. So that's pretty healthy. And then that's, again, I'm looking at the average 90-day. I don't care about the 1-day volume. I'm going to look here at this box, which pops up, and that shows me that's 16.1 million. Okay, so far that's the most liquid one, even if you adjust for the share price. And then MSDD, I look at that. I think all these are relatively new. They came out shortly after the spot Bitcoin ETFs were approved. And candles look all right. It's also about a $60 security or ETF. And the average volume is only the average 90-day volume is only 8.6 thousand shares, so 8,600 shares. So that's thinly traded. So, okay, so all other things being equal, so far I like MSTZ for liquidity. Why does that matter? Because I would normally use in a fast moving market orders. Your brokers will send you things, hey, market orders, be careful, they can get filled at any price. Thinly traded stuff, don't use market orders, you're going to get raped because the bid and the ask are large. It's not they're intentionally raping you, it's that the exchanges match buyers and sellers, and if you don't have a lot of if the bid and the ask, which is the spread, if it's much more than 1 cent, in some cases it could be 5-10 cents, you can get a horrible fill, especially if you're a good sized trader. If you listen to my voice and you have a multi-million-dollar account and your number is going to be a couple, you're going in $250,000 or whatever, you put a market order on a thinly traded stock, you're going to get, again, I'm sorry for using the term, but brutally raped on that order. So those, you have to use the limit orders. Now the problem with limit orders, set your price. I usually try to split the bid and the ask. Somewhere in there, I might move a little closer to if it's not moving, I'll bump it up a little closer to the ask price of what I'm trying to buy. And then you're going to get, if you've done this, you know what I'm talking about on big old partial fills. You're getting fractional shares, 5, 10 shares, 15, or maybe you were trying to buy 2,000 shares and you're getting a couple hundred filled. And eventually the stock moves away from you and you only have a small fraction of what you wanted. So there's the kind of pros and cons of limit orders. So I like liquidity where I can fire off a market order. And with liquidity comes thinner spreads, the difference between the bid and the ask price. The bid is what you pay for something. The ask is at the same point in time, if you turn around and sell it, that's the price you're going to get. All right, so kind of crash course. And most of this stuff is probably basic to any of you that have traded or bought stocks or even investors. And all right, so now let me show you where that point about if you get the timing correct, if you have the confidence, the skill sets, if in this example, if not only the market were to crash, but Bitcoin happens to do the opposite of what most crypto heads think, if it goes down because of my whole forced, liquidation, margin call, vicious cycle thing. So what I'm going to do, we're on, let's go to MSTR. Is that what we were on? Yeah, MSTR. And let's just look at the last big drop. That was right here. My crosshairs, if you look at my pop-up box to the left, I'm going to go to the high of that candle right here. I'm going to grab it. It tells me on January 14th, that was the high. And you can see what I call a fairly unidirectional trend. We only had a couple green closes, and they weren't very big. They weren't. This is where you don't want to be in a leveraged side. This is where you want to be in it. So I'm going to show you the math on this. I'm going to grab the top. You can see, let me make sure I got the little top of the candle. I move around. You can see my dotted line. I'm right on the top. And I'm going to go to where it bottomed on February 5th. And that was 45%. You can see on the pop-up box on the bottom, on the left of the screen in red, just above the bottom, 0.23%. Okay, so now going off that logic, if a 2-time ETF just did its job perfect and didn't have any expense, remember, ETFs have to have expenses too. Strategy is strategy. That they're tracking this. They're using derivatives to track it. So in the most perfect world, if there was somebody created an ETF and they were completely altruistic and they didn't want to charge you any fees, they were going to eat all the expenses, then you would expect 2 times that return if that whole decay thing didn't exist, right? And then so double 46% would be 92%, right? So that's our benchmark now. In other words, there was a kind of drop that you're looking at that you want to position. If you have a good degree of confidence, there's going to be again a what I call a mostly unidirectional move, mostly straight down, or when you're bullish, mostly straight up. So 92 is the number to beat. And then the next thing I did is I looked at all 3 of those ETFs, given some didn't have liquidity, but I want to see what's their performance like. Now, you want to deep dive, that's up to you. If you want to read the prospectus, look at their expense ratio and all that stuff. But again, these are Tinders for me. These aren't Match.coms. In other words, if I'm using especially a leverage ETF, I'm dating it. I'm not marrying that thing. It's not a buy. It's not, when I talk about a unidirectional move, a big move coming, maybe weeks, couple months at most, but usually days or weeks is what I'm looking at, guys. Not many months or years. So I don't really care that much if one has a slightly higher expense ratio than the other. They're all going to probably be within the same area. So now let's pick that point up. Here it is right here. That's January 14th, the day that peak, that significant top that I had in strategy. And I'm going to go to the February 5th peak in this, which again was the trough in strategy. And there's your number right there, guys. 182%. Okay. Remember, if it did 92%, that would be amazing, because that would be twice the drop of strategy, not factoring any of the fees that these ETFs must charge, that they incur themselves. The fees to buy the derivatives that they use to get the leverage, and of course make a little profit there too. They're not in this for free, but yet you blew the number away. In fact, that's damn close to a quadruple there instead of a double, right? Versus the drop. Oh no, I'm sorry. Yeah, strategy dropped. Strategy dropped 46. So we would expect in a perfect world a 92% return over that period of time. We got 182. So there's one example. Again, the math works for you on these kind of drops. So that was SMST, MSTZ so far, which I said had the seemed to be the most liquid. Grab the bottom there, the January 14th bottom. I go to the top, and that is 183.7. So we're going to round that off to 184. That's so far not only the most liquid, but also has the best return over that period. So that's 184. And then the last one was MSDD. Again, I'm going to grab that low, which was the peak in strategy on the 14th of January. Go to the February 5th bottom in strategy, which was where this thing peaked. And I come up with 176. And that's quite, it still blew away shorting even, twice the amount of strategy if you shorted in your account. Let's say, let's say your number's 100,000 and you decide I'm going to short 200,000 strategy. I believe I don't want to leverage up. But again, what these leverage things do, the other thing, besides letting you short in a non-shortable account like an IRA, it's burning less than half the capital. So if you had a one-time short for strategy and a two-time short, that's where I like to use them in the IRAs, where I'm going to go with an ETF, or I want to short something other than futures. If it's not what I have some IRAs that I don't have the futures shorting ability. It frees up capital, because if your IRA is 100 grand and you wanted to short, let's say 10,000 strategy, well, you only have to buy $5,000 of one of these ETFs. That's freeing up a lot more capital to do other things, diversify, and have other trade ideas. So, all right, so this guy loses clearly because it didn't have the liquidity, and it underperformed in that run right there. Again, I'm just what I'm picking on. It's just how my analytical brain works. And so the winner, like I said, for both liquidity, which is a big thing, as well as the performance over that time period, is this guy here, MSTZ. That would be it. And again, I don't mean this in a bad way. Please don't ask me for price targets on MSTZ. If you do it, here's how I do it. I will be doing it. You look at the MSTR trade, even if you're not going to trade strategy directly, set price alerts. If you're targeting, my first target is a 102.19, always cover a little above that. So you set a price alert at let's say 105, 104 when it gets close to there, so you have a heads up. And if that's your plan, what you do instead of, because you're not going to be short strategy, you're going to be long MSTZ, you just get that price alert. And if that's your plan to only, you're only shooting for that drop, you go ahead and cover there. If you're, same thing here, if you're targeting T2 or my T3, set an alert a little bit above it, give you a heads up, and watch these. And if it gets, again, close enough, Like I said, I see support at my final target for 44.26, current final target. I gave you in the video earlier today a potential if we get a crash like scenario that just annihilates crypto. And again, the unwind trade, which I think is a possibility. Again, that's why I like to, I'll be wrong, but I'm always looking 5-6 steps ahead. I'm not looking, I'm playing chess, not checkers. And so chess tells me when I'm looking 5 steps ahead that if strategy gets down here, they're probably going to be selling Bitcoin. And when that hits the headlines, people are going to freak out. And all of a sudden, that's just going to probably just crater it. And then, so therefore, I might let it run. And sometimes what I'll do on a trading plan is, let's say I was targeting T3, but then we are in crash mode. I think it might hit. As you get down close to it, instead of booking profits there, I'll just set a stop. I'll give it a little room for the volatility and just trail that stop down. You can either set a trailing stop with your broker, or sometimes I usually like to manually ratchet stops down tactically on the way down and let it run. And instead of hitting a home run or a triple, well, we'll call that a single, double, triple. That would be the grand slam right there. I mean, again, I know it's a long shot, guys, and I do these videos. And look, if strategy turns around, everyone starts buying crypto, whether because the market turns around, there's some kind of Fed save or Trump save on the market, or just there's more buyers right now than sellers, and these breakdowns that we're threatening right now start to rally again for whatever reason. If crypto and strategy starts going up, then that's it. And I just did I'm about done here, 26-minute video, not for nothing, because again, these are takeaways that you can apply to any leverage ETFs. And I'll say this, if you're not sure, if your chart reading and trading abilities, if you have no idea when these kind of moves are going to come versus this, then stay away from leverage ETFs. You can trade those things. There's nothing wrong with trading them. The reason we got this, you had a trading range right here, this box, and then you broke above it. And just like I've been talking about for months now, the stock market, trading ranges are like energy building, like a coiled spring. So whichever direction you break, you typically get explosive moves coming out of there. And so that's most likely one reason you saw such a strong unidirectional run. That's when you would want to be long a 2-time or a 3-time leverage strategy ETF. Over this period of time, you wouldn't, because you would most likely, even if you bought it here and then sold it here exactly where strategy was, you would have lost money from the decay, from this up and down, back and forth. It's especially the daily closes. But this kind of grind, there's a lot of that. Alrighty, we'll stop it here, 27 minutes. There's a trade idea for you, an alternative. Again, out of the 3 that I could find, MSTZ looks like the best pick. I don't spend hours doing this. That was a 15-20 minute DD, due diligence process for me. If there's another one that you know of that's better, more liquid, by all means share it in the comments section. I get a lot of good ideas from you guys, be it ETFs or sectors I wasn't aware of, or a certain stock or sector or commodity that it just wasn't on my radar at the time. And so as always, I encourage you to keep the comments coming, questions, your trade ideas, even if they don't align with mine. I promise you I take no offense, as long as you do things in a constructive manner to both myself and other subscribers. I will not tolerate people putting other people down. You can certainly have your own opinion. That's what the comment section's all about. Just keep it constructive. That's all I ask. Okay. This has been Randy Finney with Right Side of the Chart. Have a great day.